Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 10th, 2009. Well, folks, as we get into today's video, you are seeing the markets float up right now. We are actually at a double top from about a week and a half ago on the markets, which is a key level. Good scalping opportunity. You can see you had a little bit of a dip here from the high pivot of this candle, which matched the high from about a week and a half ago. I'll show you that on the 60-minute chart in a minute. But again, you can see the pullback to the tail here. Now you're starting to creep back up, but this area is resistance right now. Ultimately, I do think this market could go as high as 104.50 today. That is the ultimate upper level of where I think this market could go up to. So watch that level. 104.50 on the spiders will be resistance, even though you do have some resistance right here as well. Now, a couple things to look at. First of all, the markets are floating gently higher on the back of some positive news out on jobs this morning. We had Obama's speech last night. Asia, for the most part, was good, strong last night again. China was lower, but the Nikkei and the Hang Seng were positive, up very, very nicely. So that gave the futures a little bit of momentum, including the Obama healthcare speech. Futures did float up during that speech. This morning we had a little bit of whipsaw action, but when the jobs number came out, the report came in a little better than expected on jobless claims, and that gave the market a little bit of an extra push. Now, initially, we basically opened flat on the day. Initially, the market sold down. Ultimately, though, the same thing that's happened the last few days is happening again today, which is early on the heavy sell candles in the beginning of the day. As soon as that subsides, the market's able to push back up. And you can see, look at the volume here. Very, very interesting on volume across the board, and I'll highlight that in a second for you guys. Take a look at this. Your heavy volume in the morning, and now look at this. As we slope down, you can see what is the market doing? Sloping up. Notice that. Notice how the volume is decreasing. The market's moving up. Now, volume is okay today. It's not spectacular. Tuesday, which was the first day back from the Monday holiday, was the lightest day of the year. Yesterday was pretty much right in line with almost the lightest day, but a little heavier than Tuesday. Then today it looks again to be a little heavier than yesterday. You're slowly getting a little more volume back, but we're way far away from having normal trading volume. Now, what's driving this market up? Simply, you guys should know this by now. I mean, I've said it till I'm blue in the face, and it continues to hold true. Simply, it's the dollar. Dollar, as simple as can be, is the reason why this market is floating up. It's been that way since March. The market's bottomed in March. Well, guess what topped? The dollar topped in March. Ever since March, the dollar has come down substantially, and I can show you that UUP on the daily chart. Let's take a look at this. Check this out, guys, on the daily chart. Actually, you know what? I'll show you on the weekly. Here's March. Right up here, look at what the dollar has done. Look at this week. Even more downside. So the dollar has gone like this. Now let's look at the SPY on the weekly. The markets have gone like this. Look at the differences right there. Literally both, one bottoming in March, the market's bottoming in March, the dollar topping in March. Fascinating to think about that this whole trade in the market has been pure and simple a dollar trade. Now, obviously, there's more complications to that. It's not just that simple. But right now, simply put, I mean, if you just want to focus on the dollar, this is what's been going on. The dollar's been weakening, whether it's on purpose or whether because they're printing trillions and trillions of dollars, who knows? But bottom line is, as the market gets stronger, the dollar has gotten weaker, and there's a direct correlation between the dollar and the markets, and I just showed you that on the charts. Now, having said that, we're still up in resistance here. You do have continued resistance. You can see this line right here, 104.35 to 104.25, continued resistance here. We just got the 30-year bond auction results out. That is coming in decent again. Now, whether or not the Fed is actually buying up some of these auctions is debatable. They did that a couple of weeks ago as well, where they bought back. They had some backhanded handshake with some foreign investors in foreign countries, where they bought back the 7-year 10 days after they sold it to them, which is a little shady, as it wasn't really announced that they were doing that. They kind of made a backhanded deal to say, okay, guys, buy this up, make it look good, we'll buy it back from you. I think that's a little on the shady side. I think the market should realize that. There has been some good spots on the Glenn Beck show there that highlighted that a couple weeks ago as well. You can go search for that if you really want to. But long story short, the bond auction of the 30-year coming out decently. The jobless numbers coming out a little better than expected, 550,000 jobless claims. The initial claims, that's the initial claims number. The continuing claims coming in a little better. Now, whether or not the continuing claims is because people are falling off because they can't continue to receive unemployment is debatable as well. There's a lot of little fishiness in there, guys. I mean, there's a lot of little debatable points whether or not the economic data is truly good or truly improving, or is it just because of a couple little inches here? You know, did 550 jobless claims last week because the bosses all went on vacation, they didn't fire as many people, and because people didn't file for unemployment last week because they were away with their families even though they got laid off? You know, that's, again, whether or not that's happening, we have to see. We'll know next week. We'll know the next couple weeks. Next week could be light as well because you had had Monday off here. A lot of traders take a couple days extra this week. Maybe that's the case as well, but we'll continue to follow that very, very closely. Market continuing to hold this resistance level, guys. Look at this double top. From this point here to here, if we go up 104.50, as I just mentioned, will be your next spot. But right now, you do have that situation where the markets continue to kind of hit this resistance area. The biggest level, and I've highlighted this, and I said this to the chat room today. Again, I couldn't agree more that most of you guys should be joining the chat room, even if you can't be day traders. It's just the learning environment is priceless. But what I said to the traders today in the chat room, I said, guys, this level, and I highlighted this to our research center guys, so even our research center guys had this last night. I said, this blue line and this 50 moving average right here, I said, if you can't break this, once you get below and close, then the market will fall. I said, as long as you stay above it, this market has to have an upside bias. Simply put, said that to the chat room right at the open this morning. We came down, we didn't close below it, and then look at the move up. So again, as long as you stay above this 50, you have to have an upside bias in the tank right now, and that was dead on call from today in the chat room and to the research center guys last night in the video. You got to understand the technicals of this market right now. You got to understand the volume. You have to understand everything that's going on right now to keep this market floating as long as possible. We'll continue to follow this and give updates tonight in the research center, but this is some key stuff. In addition, I posted a few more things on the hot charts and alerts to our premium guys off of major technical levels on the monthly and weekly charts. Definitely join for that alone. Hot charts and alerts have been unbelievably hot of late, nailing moves in the market on a swing trade basis there or a longer term basis. Okay, so the market's coming in. I just called this resistance area. You can see where it's coming from right here. That's definitely a key. In addition, you could actually make a case where if you took this high right here, even back here, and just extend this. Look at this, guys. How freaky is this? Take the high to the high to the high, and look at where that went right above that line, and now look at the pullback. Very, very interesting to note that, how it's almost a parallel line as well if you take this line as well and just draw it underneath. So kind of some interesting chart patterns developing here that need to be watched in an amazing way. Now again, what did I tell you about this double top right up here? Look at the 60-minute from right this point on the 28th. Look at that. Touched it literally to the penny. Within 1 penny there, we went 1 penny above it today, right to that point, and now you're pulling back off that level. Actually, a nice little pullback starting now to the downside. We'll see if that continues. Interesting again, guys, I mentioned all this move up is purely intraday. Debatable is, in my opinion, and again, people can debate it. I think it's nonsense because I think it's dead on. Anyone that debates it just doesn't know the markets well enough. But the dollar is a key result of this market going up. Check this out. Markets initially sold off, right, for the first candle or two. You had a downtick, and then the rest of the day it's pretty much been going up. Well, take a look at the UUP, which is the dollar index. First two candles, what happens? Dollar goes up. After that, dollar goes down. What have the markets? A perfect inverse to what the markets are doing. Perfect. And again, notice, look at over the last couple days. Look at the dollar. Last couple days, just continuing to go lower right here. What have the markets done over the last few days? Let's go back to the SPY in the 60-minute. Look at this move here. This is the 10-minute, but you can see just a constant move up. So you have to look at this dollar. Guys, if I wanted to manipulate the markets, which the Fed can do, all I would do is manipulate the dollar. Simply put, you want to make sure this market stays up right now. Now, eventually that'll change. Right now, make sure the dollar does not rally, and you will continue to have an up market. Simply put, guys. That's all there is to it. In any case, good stuff today, guys. There's some big things happening here. I'll report on this tonight in the video. Come join the research center. Come join the chat room. We're actually discussing a new format for the chat room, which is going to be fantastic. I think it's going to bring in guest speakers. All this stuff going to be coming soon. So again, keep your eye on that chat room. You want to join soon, folks. Get in on that, as again, eventually we will lock out. Once we get too many members, we cannot have more members. We'll discuss that soon, though. Have a wonderful rest of the evening. We'll talk to you soon. Take care.